please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have the Korean markets. They're trading with gains of close to about 0.3%, primarily on account of one, lack of liquidity in other markets.
Today might not be a day to chase. Today might be a day to wait, see if the Nifty slips into the red, and at that point, perhaps a better buying opportunity may emerge.
By chance, if there is too much of panic or something like that, I think it's a terrific opportunity to buy. I don't think the prospect of the business or the company has anything to do with one individual.
10,720 is on the board, and the Sensex as well starting 100 higher.
We probably have a lot of tailwinds at this point in time with double-digit earnings growth into the next 24 months.
The Reserve Bank eased the rules which govern foreign investment in Indian government bonds and in state government bonds.
The Nifty is now higher by close to about 55 points. The Sensex having gained close to about 200 points.
Okay, it's been a very strong follow-through to Friday's move. Of course, intraday not too much of a follow-up, but overall, the bulls should be happy with the way the market has gained. Secular move is what we have seen in today's trade. This is Closing Bell. I'm Manoj, and with me, of course, is Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. I want to talk to you about Kotak Mahindra Bank as well in just a moment. But before that, the market. I guess today the bulls wouldn't complain, right? Because financials, some of the erstwhile commodity stars, IT, a lot of legs to today's rally, you'd say?
Yes, but Surabhi, again, as the point we discussed in the morning as well, that there are some breakouts or some gap ups that you chase. Friday was that day when you had to chase that move. Today has been a day where the market has just rewarded those who, had stayed put with the Friday positions at index level. This morning, I mean, if you would have bought at any point, you're not making anything. But if you've been long, this market is rewarding you. Intraday today, a lot of stocks are moving. And I think in general, earnings reaction is more good than bad. You spoke about Kotak. But in general, and what good about today's trade is that it's a bit secular in nature. And despite Reliance falling the way it is, despite Axis giving up half of its gains, despite ICICI Bank falling, the market is up quite a bit. So it's telling you that there's inherent strength in this market. The market will give a signal when it wants to reverse. This zone is important, 10,750. I think so. That's a point where you have to take a decision that you want to take that bet. But the way IT has moved and a couple of other sectors have moved, today has been a good day for positional longs for sure.
Okay. Now, just a word on Kotak Mahindra Bank as well. Let's get the stock in. The numbers were blowout. You can't complain. The kind of loan growth they've done, margins intact, asset quality is stable. Stock is still muted. Stock of the day once again today is Yes Bank actually. Is that just a case of catch up, whereas Kotak went in on a 52-week high in the numbers today?
Kotak's recent low was 900. From that to 1200. It's been a massive rally, and yes, of course, is the one which has corrected and now is seeing buying. Perhaps the buying got overdone on the results day when we discussed, it was also expiry day. So obviously after that there was some consolidation, is rallying. Also, Surabhi on Kotak, I think the market is now beginning to believe that
if there's M&A happening,
that deal perhaps would happen, over the next 6 months or so. So that I think would be a new variable. But you can't complain on Kotak's earnings. And I think 2 days back, we were discussing this in the top 10 stocks to watch. The fact that it was not a day call. Kotak actually has been a bigger wealth creator than even an HDFC Bank. If you see the last 15 years, the biggest compounding stock in the banking pack has been Kotak Mahindra Bank. How should you position yourself in this last hour of trade? Rajat Bose and Sudarshan Sukhani now join us with closing strategies. Good afternoon, Sudarshan. So for positional longs, it's been a good follow through. Your thoughts on trade so far, and what kind of stocks would you recommend?
Yes, good afternoon. Positional longs were taken on Friday morning after the gap up, but once a breakout occurs, the 10 or 20 points up or down doesn't matter. The trade is to be stay in that position. So for the Nifty Bank and the Nifty, if you still don't have a positional trade, I mean if you are still not long that viewers, then even now you can go long because momentum is just building up on the upside. Apart from this, we have already discussed the indices, be long in them. Most individual stocks, Anuj, are giving us the same pattern. Try to go long in mid caps, make that a BTST trade, buy today. There's no rush in getting out by 3:30. Hold it for day after morning. So Amar Raja Batteries is my first suggestion. Amar Raja Batteries has gone through a correction. It's now making those higher highs, higher lows pattern. It's doing it slowly, but it's there. It's going up. So that's a buy. Tata Elxsi from the mid cap IT pack, you've spoken about it in the morning, how mid-cap IT is running away and not stopping. So that's a buying opportunity. We had Hexaware in the morning. Really, you could close your eyes and buy any of the good quality mid-cap IT stocks. Tata Elxsi is the choice for the afternoon. And finally, Titan, where a correction does not come at all. It goes and consolidates, and that consolidation is a correction. So I think very significant higher levels are coming in Titan. 3 mid-cap buying ideas and be long in the Nifty and Nifty Bank.
Okay, Sudarshan, just a follow-up question. Since you're offering hope to people who still didn't have long positions, you're saying even now one can start participating in this rally. Is the Nifty a better long call or the Nifty Bank?
The Nifty Bank is a better, comparatively, relatively speaking, the Nifty Bank is a better long call.
Okay, all right. Well, we also have Rajat Bose with us this afternoon. Good afternoon to you, Rajat. What is your reading so far, and of course the ideas for the last hour?
Good afternoon. What I have read so far is that the Nifty has behaved on expected lines. I was expecting some resistance right in the morning. I told you that 10,753 was the key target level that I was looking at. It's actually posted a top slightly above that, and after that it is consolidating. But my feeling is that I would still like to buy Nifty, because Nifty is trending, and it is trending in a very strong manner. So I would use this dip to buy Nifty for a carry till about Wednesday, and my stop loss would be day before's closing price of 10,695. And the targets that I have is 10,780 to about 10,804. And regarding Bank Nifty, what I tend to think is that 25,650 to about 25,750 is a supply zone. So people have made good money in Bank Nifty today. So why not book part profits or full profits and keep yourself light as far as Bank Nifty is concerned, because mostly people would be carrying some individual bank stocks like Kotak or Yes Bank or HDFC Bank. So perhaps booking profits in Bank Nifty would not be a bad idea. Coming to my stock ideas, I would say that first stock, Jet Airways, stop below 638, target 656 and 653. And then there are 2 bank stocks, bank futures, Kotak Bank May futures. I would buy stop loss below 1197 and target would be 1225. And HDFC Bank May futures, stop loss below 1943, target would be 1979 and 1986. And finally, a stock that I personally hold in my investment portfolio, Biocon May futures, you put a stop loss below 668 and the target would be 693.
Okay, the market's coming off a bit. Don't lose sight of that. The Nifty is up 35 points now. Still in the green, of course, and by a margin, but slightly off the highest point right now. Dilip Bhatt of Prabhudas Leeladhar and Mayuresh Joshi of Angel with us now. Good afternoon. Dilip, big divergence today between private banks. We have Axis down about 4%, ICICI again down about 2%. But HDFC Bank, Kotak, Yes Bank making big moves. Your thoughts on this space?
Well, I think the divergence trend continues. I think especially the 2 banks which you named which are down, I think they have their own reasons and people have their own apprehensions as to how this is logically going to pan out. It's something where the apprehension is pretty high. I think the rest of the private banks, it goes without saying that out of that, HDFC always has been and will remain a kind of a no-brainer. I think it's Yes Bank and Kotak Mahindra which is really emerging as the 2 banks which have really held out very well in spite and despite all kinds of scenarios that we have seen, and they have performed quite well. So I think these 2 banks still will remain on the radar of the investors for them to acquire and for them to buy.
Okay, all right, that is a comment on the banks. One stock on the move since morning is Indiabulls Real Estate, and now it's surged to about an 8% up move. Mayuresh Joshi with us. Afternoon to you, Mayuresh. Do you track this company? I mean, it had very mixed sort of results. There were some extraordinaries in the top line, but they also announced a major debt reduction plan. Any views?
So afternoon, Surbi. Oh, so again, I think the numbers absolutely right. I think it was mixed. And the debt reduction plan, I think as it probably rolls out, should substantiate the balance sheet over the next few quarters. But again, the move in the stock has been quite exemplary. So I think within the real estate space itself, we're very, very selective at this point of time. Within the Mumbai-based ones, obviously, I think players like Godrej Property, Oberoi have done well with the announcement of the new DP rules. Obviously, landowners like an Oberoi are going to get the advantage of leverage on their balance sheets. Godrej Property with its strong sales velocity, the pre-sales velocity also for any new launches as well as the revenue recognition probably holds it in good stead. And again, I think something like a Brigade Enterprises, where our own belief is that the kind of opportunities that the stock can get, both in terms of upcoming projects, along with revenue recognition of its existing project, should hold good for their earnings yield perspective. So Brigade on the bottom up is something that will continue lighting a clear hold on Oberoi and Godrej. Indiabulls, again, I think consistency in numbers is required, and the debt plan probably just stated by the street.
Fair enough. Lots of stocks on the move, by the way, right now. You have IRB Infra surging to the highs of the day. There's a lot of buying on Marico ahead of the company's numbers, 2.5% over there. And a much smaller name, mid-cap from the mid-cap basket, Opto Circuits, suddenly up 10% as well. So lots of stocks, of course, flying around beyond the indices. Anuj, but one stock that I really don't know how to look at, this PC Jewelers, I mean, down 18%. Now we have the promise of a buyback, but even that hasn't supported the stock.
Yeah, and you know, your heart goes out to retail investors who would have bought Surabhi, and a lot of retail investors would have bought at 300. Because thinking that, it was a temporary issue. So we've been warning about it, that stocks don't fall 40% intraday unless the market is sensing that something is wrong, and all kind of management clarifications are not helping. This morning also made the point that the Vakrangi also announced buyback, but it really didn't matter. And now PC Jeweler down about 18% in 3 months. Now it's down 75%. So obviously this. The market knows something which we don't know at this point in time. Perhaps some disclosures at some point comes or something, but just the weights destroyed value, and this is one reason that I do believe that we, the recent SEBI move on moving to cash settlement and on reducing number of stocks in F&O is actually a good move. You should have, I think, the 50 nifty companies and perhaps 60-70 other good liquid stocks in the F&O, because otherwise there is temptation when stocks fall to buy, and sometimes when you buy like stocks like these and that to naked positions, the weight of selling after that just leads to this kind of decline. So yeah, I mean, you have sympathy for those who bought in, but at the same point, it's an F&O stock. So there are people who would be shorting as well and making money hand over fist. So it works both ways, I guess.
Sure, absolutely. Well, that's PC Jewelers down 18% as we speak. I'll tell you what wasn't down. Coming back to earnings, it's the numbers posted by DHFL. Now, the housing finance company has come out with a very, very strong set for the fourth quarter. In fact, their disbursements are up 82% year on year, 45% quarter on quarter. The AUM growth has been a handsome 33% year on year as well. So let's get some trends going. We have Harshal Mehta, Joint MD and CEO of DHFL, now joining us on the line. Afternoon, Mr. Mehta. Good talking to you. It seems to have been a blowout quarter. Do tell us where this loan growth is coming from, this 80% odd growth in disbursements.
Good afternoon, Subi. Yes, we just released our numbers, and when you compare compared to last year, the numbers has looked good. Predominantly, again, riding on the affordable housing story, cutting across the outskirts and the tier 2, tier 3 markets. We did see good uptick in our home loans business. At the same time, we did also see good uptick with respect to our loan against property and SME business on the backdrop of how we saw the GST implementation coming on board, which also helped us augur that business.
Harshal, hi, good afternoon. So how much of your overall profit comes from, and I'm talking about profit, not the business, from the loan against property book?
See, from a segment perspective, if we say that the profitability, when you look at it, predominantly comes from the home loan business, because at a portfolio level and at an AUM level, more than 2/3 continue to be the retail home loans. So that's where the business profitability comes from.
Okay, and 1/3 would be loan against property, right?
Yeah, it would be a combination of loan against property, SME, and project finance.
Okay, so in this 1/3, Harshal, is there a risk of irrational, lending, and perhaps, some would argue, going forward, the growth not coming, with the commensurate with the asset quality. Is there a risk here?
See, while there has been a lot of talk and reports around a non-housing loan, predominantly around loan against property, I would say as far as DHFL is concerned, if you look at it, our focus even on a loan against property has been around retail, and in that, even on that loan against property, our ticket size continues to be retail at about 40-45 lakh rupees, which kind of tells you the granularity of that business. And to that extent, we are not seeing any kind of stress which can really get us concerning with respect to how we go after that business.
Harshal, just a clarification: this breakup that you gave us, 2/3 and 1/3, that you're giving us the total AUM pie, as in it's the breakup of the total book.
Yes.
Okay. Just want to come down to some of the other internals now. Where would the NIM number be for Q4?
The NIM for Q4 is at 304 basis points, and it has always been our endeavor to maintain the margins and protect the margins in the range of 300 to 305 basis points. So we are at 3.04%.
Okay, Harshal, we'll leave it there.
Just one question, Anuj, if I could squeeze that in, because I was discussing this with Lata just a while back. Harshal, important development from the regulatory perspective this morning. The RBI has now opened up the ECB window for housing finance companies as well. Just want to understand what this will mean for you in terms of costs, because I think it comes with the hedging caveat as well, and whether you'd look at tapping this overseas window.
Yes, Surbi, I'm glad you asked this question, because this is definitely extremely good news for housing finance companies like us, because one, we fall in the automatic route because of the focus around affordable housing, and clearly it gives us an opportunity to tap overseas market to diversify our borrowing mix. At the same time, for the overseas investors, it gives them a great opportunity to participate in the affordable housing story across the country.
Okay, Harshal, we'll leave it here now. Thanks a lot for joining us. Good numbers from DHFL. Of course, the stock had a rally before that as well. But today's been a different, spectacular stock-specific story in housing finance. You have DHFL, of course, up 1.7%. You have Canpin Homes, which is actually down 7% as we speak. And you have a Repco Home, which is up 8.5% and is making highs of the day right now. Dilip, your thoughts on this space?
Well, I think this space continues to be in a very sweet spot as far as the loan growth is concerned and as far as the NIMs are concerned. So I think this is, and there is more of a kind of an annuity business, and they are very sticky businesses where the sustainability and the visibility seems to be pretty high. So I think this entire space definitely is the focus of a lot of investors. But within this space, I would still prefer to buy something like, I think DHFL certainly is one of the stocks which probably still a lot more underpriced, considering the fact that the company's growth is pretty good and even the ROEs are pretty good. I think another stock which has fallen today is Canpin Homes. I think that is another stock which probably merits a look. For whatever reasons, I haven't analyzed today's results, but it has fallen. But I think there is a great value to be unlocked over there, not just in terms of a very sustainable and a consistent performance, but a strategic sale that may happen in the near future. So I think both the stocks merits quite a good look, and I think it would be a reasonably good buy. Apart from, of course, HDFC, which always remains evergreen on the radar.
Oh yes. By the way, ICICI Bank has moved to low point of the day, which is quite interesting.
There's quite a bit of a cool-off from the highs, as Anuj was pointing out. It's ICICI Bank. Even the recent poster boy, Yes Bank, is given up from the top of the day. So yes, the cool-off continues, at least for now. Sandeep Vagle is joining in. Sandeep, good afternoon. It's been a good day. I mean, if you had positions open on Friday, but what kind of trading bets are you going with now?
Afternoon, Surabhi, I would go with a buy in a Yes Bank, stop loss of 360, target 378, and a buy in a IRB, stop 270, target 288.
Okay, Sandeep, thanks a lot for that. Yes, IRB has been a big mover in today's trade. The other big mover today, of course, has been Tata Chemicals. That FII window being open is obviously helping. But Dilip, I also wanted your thoughts on power space. That's buzzing off late. Today also we've seen CG Power doing well. A couple of stocks like Power Grid, NTPC, they seem to be doing well. Even some of the ancillary stocks like PTC also doing well.
Well, I think we had some very good positive news yesterday on the electrification part. I think that news also is rubbing off in a big way. But I think having said that, there is nothing which really, inspires fresh confidence in this particular sector, in the sense that there are no fresh inputs which can really provide a good tailwind to this particular sector, except for the fact that maybe the power tariff rates may move up a little more, which can be a little more positive for some of them. But by and large, they are all passed through, as what we all know, based on the cost. So having said all that, I think in this space, we probably will still continue to like something like a Power Grid or something like transmission companies, KEC or Kalpataru, rather than betting on some of the main power companies.
Okay. All right, Dilip. We'll leave it on that note for this afternoon. Thank you very much for joining in. You enjoy your one-day midweek holiday, and we'll connect again soon. Well, let's say hello to our next guest on the show. Basant Maheshwari, author as well as portfolio manager, joins us now on this leg of Closing Bell. Basant, always great having you on the show. Thank you for joining in. You know, I'll start with the hottest question first before we discuss markets, trends, etc. We know your love for housing finance companies, and we know what's happened with one of them, the whole Canfin deal. What are your thoughts on this space now? We've seen some blowout numbers from DHFL and the positions that you've been holding.
I mean, first a disclosure, we are not in Canfin anymore, and thankfully we got out before the fiasco of the deal happened. So, I mean, the logic was simple. The government of India and its bureaucrats, they find it very difficult to take decisions, and sometimes for them no decision or indecision is in itself a great decision. So this is what happened, and the timing of the deal was happening in such a manner that they had to do it on the 31st, and knowing how things are and the CVC and the CAG and all that, it was pretty sure that they wouldn't do it, and I think they just wanted to let it go. The problem here right now is not with the specific sector, but with the but with specific companies. For example, you look at the results of Indiabull Housing, or you look at DHFL. The entire sector is growing at 15, 16, 17%. So when the sector grows at 16, 17, it's very easy for companies to grow at 25, 30. And after the RERA, housing is not a perishable commodity. So if you don't buy an apple today, you won't buy 2 apples tomorrow. So if you don't buy a house today, all that demand gets bunched up and will come to you. It's very much like what happened in the automobile space or in the CV space. So when people don't buy cars, they just go out and buy it after 2 years, after 3 years. The bunching of all the demand comes in. So that's going to happen. So right now we don't own Canfin, like I told you, and we were out of it, thankfully, before the entire heavens broke through. And but the sector should do very well, and for that matter, not just housing. I mean, there are consumer companies who are setting up housing subsidiaries also. They should do also very well. So there's no problem with the sector. There's no problem with the entire segment. There's a government tailwind, and everything is happening. So we can just take our picks and move ahead that way.
Okay, Basant, hi, good afternoon. What about banks? We're just discussing this. Today has been an interesting day. There's, of course, Kotak, which has been the evergreen stock, but of late, there's been a lot of volatility, for example, in Axis and ICICI. Yes Bank has made a strong comeback. Your thoughts on this space?
Anuj, first thing is there's just too much of suspicion with these banks. For example, Yes Bank, of course, we don't own it. So everybody comes and says there's a corporate loan book, there is this, there is that. But you have to understand, and I have to understand, and the market has to understand, that if there is a problem, and if the RBI hasn't been able to figure out a problem, I'm not saying there's a problem, I'm bullish, very bullish on these banks. So it's just wastage of time trying to find out a problem in the next bank. So if there's a problem, the RBI has got its mechanism. Of course, there'll be a Nirav Modi, there'll be a PNB, and I mean, the problems in banks also happen in the United States. So these things will happen. So coming back to it, there are different ways of playing the banking story. One is the M&A story, like you spoke about Kotak, buying Axis and all that. The second is the banks in the small finance banks, for example, somebody who's doing CV lending or somebody who is just going into unpenetrated areas. So, you know, you'll find a bank where, which operates in areas where there's just no competition and they can grow at 35, 40, 45%. And what you have to do as an investor is just go out and see what these banks did when their demonetization decision by the government was in full swing. So you have to look and compare these companies, how they fared, how their NPA fared, how their asset books actually fared when the government had come out with its demonetization program. So for companies that can manage the risk well, I think they should do well. And private banks, especially the likes of Kotak and HDFC, no recommendation whatsoever. They're a no-brainer. I think if somebody can just go to sleep buying 3-4 of these top-notch banks for 10-20 years, they'll make money. But the problem is not in holding them for 10, 20, 30 years. The problem is because when you go out to buy them, you say it's 4 times book. How do you buy them? But then if you buy a 2 times book SBI or a 1-time book PNB, you know what you get after 1 year. The book goes itself. So I don't know what that competition actually means.
Speaking of banks, Basant, what did you think of this entire Axis Bank episode? Horrendous numbers. The stock rallies 10%. Today it corrects 4-5%. You know, what do you think is the next leg here in this journey?
So we look at this in an analogy. The RBI is the parent of all these banks, right? So and if there is a bad brat, there's a bad boy, you want to put that bad boy with a good boy. So the RBI is the parent, would like Axis to go with a good boy. So who's a good boy around? So there's a good boy called, I mean, I don't know, this is not a recommendation. There's a good boy called Kotak Bank, for example. And everything suits well because Kotak has to get the promoter stake down and they can take Axis Bank. So everything is good at a price, like most of the purists would say. So I think this merger has been made probably behind I don't know whether it's being made, but I think there's a very strong possibility of this merger going through and negotiations are there. And before a merger, what happens? You go and clean up everything. So you want to know what you're paying for. So I think all the writing, all the write-offs, all the cleanups happened because the books were being cleaned off so that the merger could happen. So I don't know whether it's going to be taken over by Kotak or by anybody, but the clues on the ground tells you that something could happen here. So we don't own any of these. So that's how we play it.
Okay, don't own any of these. But then, you know, it's not a stock-specific question, but your thoughts on this whole PC Jewelers saga, and you know, a lot of retail investors have lost money in this one. Any lessons that come out of here?
Absolutely, Anuj. I mean, when you look at the economic history of the Indian stock market, right from 1992, every bull market coincides with a fraud, right? So before that, let me say, I'm not sure, and I'm not saying that PC Jewelers and Vakrangi is a fraud. I'm not saying that. That's for the government and the auditors to decide. But I'm just presenting a scenario before you. So 1992, there were too many frauds in India. You don't have to count them. 1994, 95, there was this MS Shoes. I don't know whether you recall that or not. So in 2000, there was again this Himachal Futuristics, the global telesystem, then the DSQ software. So again in 2008, you had the great Satyam saga, and you had all these real estate companies and all the Unitex that lost 99%, and still, you know, that's how it went. So every time there's a huge bull market top, you find something to talk about and something to feel suspicious about. I'm not saying it's a fraud. I'm saying the suspicion starts. So the moment the Vakrangi thing hit the market, it was clear that this 11,400, 11,300, whatever the top was, I don't remember these nifty numbers, would be there for a while. And being the last year before an election, I think it's tough for the markets to go up. So again, the texture of the market has changed after that. You know, most of the people at that time were betting on hype and hope. So you buy a company, you expect it to turn around. but turnarounds seldom turn around. So coming back to the entire situation, the texture of the market has changed because right from every Tom, Dick, Harry and every stock going up, it's again gone back to earnings-driven market. So over the last 3-4 months, the texture of the market changing. Two companies, one is Vakrangi, the other is PC Jewelers. Obviously, PC is doing well on the earnings front. I don't know why the stock keeps going up and down. Tells you that the overall market scenario has been broken, the bullish scenario. So this doesn't mean you can't make money. I am more than 100% invested. This means you can make money. But these things, when they come, and retail investors, they shouldn't be buying it. So you buy PC at 150, again it is going to go to at 200 or 250, but ultimately you're going to lose your shirt and then finally your pants. So I think you should just stay away from these things. Just look at quality. If you don't understand anything, go and buy the large private banks. But that's not what people do. People want to double their money here and still be satisfied with a 8% every year in a bank FD. But that's why most people lose and very few people make money in the markets.
Okay, and certainly don't remember 94, Basant. I guess I was a young student at that point, but do remember the 2000 that you're saying. But you're making a point that the market has made high for the year. That's an interesting point because there's been a decent pullback as well from the lows.
I mean, I'm not a great Nifty predictor, and this is a point which I think I've been making right from January itself. It's on my Twitter timeline, an extract of the newsletter we sent to our clients and all. Last year of a government, I mean, the first job of a government is to win elections. And as participants in the market, we think that the first job of a government is to have a GDP growth of 9%. No, it's not 9%. The first job of a government is to win elections. So last year of a government, it has to be populist A, it has to be inflationary B, the dollar has to appreciate. I don't know why, but it happens every year. So some people tells me, before elections, bhai, paise aate hai wapis. So I don't know how that happens, but the dollar appreciates. So these things are very predictable patterns in the last several years. And the first year of a new government, you get a huge stock market rally. So if ever there is a rally happening, it should be next year and not this year. But then, I mean, how does it matter? You buy your companies and sit back.
So, Basant, finally, take your point on board. Yes, we have to watch out for whether the next couple of months get increasingly populist or not. But let's talk themes. You won't talk stocks, I know. What excites you in the market right now? And a word on consumption. I think people are up to their neck trying to find the new consumption idea, from liquor to shoes to lingerie to, suitcases to hotels. How are you playing consumption?
Surabhi, how about buying one company that sells liquor, shoes, lingerie, and toothpaste, and toothbrushes, and shampoos, and everything? So, I mean, if you just buy one company that sells all of these, you cover all of them, but then that company is expensive. But it was expensive when it came for an IPO last year. So, we own it, and everybody knows about it. No recommendation again. Avenue Supermarts, and that's our top holding in across portfolio. So, one thing wonderful about a market is, and I'll just take 2 minutes to explain this, a low-cost producer is a very dangerous animal. So high-cost producer, for example, a high-end brand, for example, let's take a Louis Vuitton, it's got a very small market to capture. But a low-cost producer, let's take a D-Mart, for example. Another example that comes to my mind is maybe a Shree Cement. We don't own it, but the low-cost producer. So the market size is huge. So low-cost producer expands market and it kills competition. The high-end brand expands market and it survives with the competition. So you have a Rolex, or you have a Rado, or you have a Tommy Hilfiger, you have a Titan. Everybody sells their own watches. Nobody disturbs anybody. But the low-cost producer is a very dangerous animal. And Avenue Supermart, being a low-cost producer that it is, I think that over the next 10, 15, 20 years, huge disruptions could happen. And mind you, consumption is a global theme right now. Facebook, Amazon, Apple, Netflix, Google, Alphabet, they're all consumer companies. So consumption is not an India-centric theme, it's a global theme. And look at the kind of growth those companies are doing. Of course, as Indians, we are only surviving on outsourcing job, but the real cream lies with the innovators. But here, if you don't have an innovator, you buy the lowest cost producer, and then you sit back and say, oh, it's expensive, but okay, we'll keep it like the way it is.
Okay, Basant, yes, the most money has been made by most expensive stocks in Indian market, as has been the case in global markets as well. Thanks a lot for taking time out and talking to us. today. I'll go back and revisit that 94 topic. By the way, just want to point out Torrent Power. In fact, this entire power space, Tata Power, Torrent Power, some of these stocks do tend to make this big move in this 230 to 330 period, and today is no different. Just take a look at that move. It's just flying away now. 2.7% higher, 2.8% higher is what we have on Torrent Power. There are a couple of others also making a move. CG Power, for example, has moved to a high point of the day. Stocks like Tata Power, Power Grid. So some of these names making a bit of a move at this point in time. Siemens as well. Just pull out the intraday chart of that stock. So power and related stocks all of a sudden making a big move. That was, of course, Tata Power. You saw that move on that one. So a lot of stocks making a big move at this point in time. HT